Hello, welcome everybody. Today I'm going to be talking about personal real estate corporations and how realtors can now access the ability to incorporate their personal real estate business and some advantages and considerations when doing so. So incorporating your real estate business is nothing new. The province of British Columbia has been doing this since 2008. Ontario just released Bill 145 back in March of 2020, allowing basically realtors to just roll over their business into a corporation. Now, there are some restrictions to doing so. One of them would be that anyone who owns shares in the business or the corporation, they have to be a licensed realtor. And these are specifically referring to voting shares. So you can still issue non-voting classes to family members or other stakeholders, but any voting shares do have to be owned by licensed real estate agents. A second consideration is when formulating the company, the business name has to have the words personal real estate corporation in the mix. So yeah, that's one of the requirements. A third would be that there is no limited liability in the corporation. So when comparing that to a regular corporation, for example, if somebody was to be negligent, usually in a normal corporation, their liability would be limited and the director would not be held personally liable. Now, in professional corporations, this does not hold. Whereas if somebody does something wrong, makes an error, the licensed realtor could be held liable themselves. And last but not least, you can only operate the corporation to trade in real estate. Like, you can't use it to funnel in any other form of active business income. And so those are some of the restrictions. In terms of advantages, one of the advantages, of course, would be the integration rules and basically how to minimize your total tax bill between yourself and the corporation. The reason is corporations have access to the small business deduction, so their effective corporate tax rate is a lot lower than someone who's in a high personal income tax bracket. So if somebody's making over a couple $100,000 and they're subject to a high personal tax rate, they can use the personal real estate corporation to hold more of the income and retain more of the income or revenue inside of the corporation, and it'll be effectively subject to a lower tax rate. Now, the optimal mix of how much to leave in the corporation can be analyzed or calculated by an accountant. So this is where your accountant will come into play and asking him, how much taxes can I save by choosing this method? There's a lot of variables, there's a lot of factors to consider, so you definitely need a professional to sit there and analyze how much money you would need personally on a month-to-month basis to finance your lifestyle, and the rest you could leave that in the corporation. There's a lot of strategies there's at least a few strategies you could take into setting this up. Our office does have the expertise to do so. So if you would like to learn more, if you're a real estate agent or you have friends that are in the real estate business, get them to contact our office. You can do so by visiting our website. It's www.accountingtoronto.ca, or alternatively, you can call our direct line. It's 416-755-3000. And thank you for stopping by and watching this video. Hope you have a great remainder of the week.